All right, so this is going to be episode 2 on basic market structure and how to identify a downtrend, or also known as a bearish trend. So a bearish trend, the way you identify it is because the price is moving and creating lower lows and lower highs. So what are lower lows and lower highs? Once price moves or rallies to the downside, it creates a lower low. And the reason why is because this low is lower than this previous low. So this will be known as the lower low. Once it creates the lower low, it's going to create a retracement or a pullback, creating a lower high. But the most important thing, just like an uptrend and how we explained it on the how to identify a bullish market, is for on the downside, bearish, a lower high is not valid, okay, until a break of structure has occurred and broken the structure of this previous lower low. So as you can see, price came down, it rallied to the downside, created a lower low because this low is lower than this low, and then it created a retracement or a pullback. But this lower high is technically not valid until it breaks the structure to the downside, breaking this previous lower low. So now this lower high is valid. Once that happens, price will continue to. So this will be the lower low, and then price will do a pullback into any level between the previous lower high and the current lower low. So anything that happens in between these two levels is just market structure. It's not anything yet. It's not a valid lower high until that elbow pushes and breaks, creates a break of structure to the downside. Once that is created, then this will be considered a valid lower high. So it'll create a new lower low. And once again, anything between this lower low and this previous lower high is your area that you're going to be looking at as a potential lower high. We say a potential lower high because it's not a valid lower high until price rallies to the downside, breaks the previous lower low, therefore validating the lower high. All right, so that's how market structure moves to the downside. So let me show you some examples. So we're on yesterday's chart for NAS 100. So yesterday we're rallying up, and like I said, so anything in this area here is going to be market structure. Once price breaks below the previous higher low on the uptrend, now you have created a change of character, changing the trend from bullish to bearish, which now we will expect to see lower lows and lower highs. So a great example of as to why everything in the middle is going to be market structure is because as soon as price broke down and broke this structure here, we now have flipped from bullish to bearish. And you notice how this did a retracement, but it retraced in creating technically lower highs and lower lows, but this trend is still bearish. And the reason why the trend is still bearish is because price never broke above this previous lower high or this previous high. If price were to come up here, if price were to come up and break above, then we will have another change of character, flipping the trend from bearish to bullish, but we didn't. So what happened was it created all this market structure, all this noise, which we could have looked at for potential areas to sell. But remember, the lower high is not validated until we break the previous structure of the lower low. So this will be the lower low here. So now that this has created a break of structure, now this is a valid lower high. And which lower high would it be? Well, what was the last elbow that pushed and rallied the price down? As you can see, it created this elbow here and then completely broke the structure of the previous lower low. So this would be, in technicality, the lower high. So we will move lower high there, move our line here, and then we move this down to the new lower low. So this is the new lower low. So now we know anything that happens in between these levels, it's just market structure. It's not anything until it decides to break above the previous lower high, changing the trend from bearish to bullish, or it breaks to the downside, breaks the lower low, creating a break of structure, and then this would be like the lower high. But in this instance, what happened? So price came down, created a new lower low. What is this right here? It's nothing. It's nothing until it breaks this structure, then therefore validating as a lower high. So hopefully that makes sense, and hopefully that helps you identify lower lows and lower highs and how to identify a bearish market. So make sure you guys hit that subscribe button, like the video, comment down below, and be on the lookout for the next episode. Thanks.